Hello, what's up, everyone? Hope everyone is well and having a good time. So, as you can see today, I'm not in the office, but as usual, I'll do the analysis because I have a couple of trade ideas and to share with you guys. And I've been looking at the markets, and the markets have really been moving. Yesterday, I was looking for two trades, very, very good trades. I had them in my trading journal, and I was planning to take those trades, but however, they didn't reach my entry very well because what I was looking at, if you've been seeing the market, I was watching the dollar. So the dollar was rising quite nicely, going back to the all-time previous high. Not all-time high, but the previous high that we had. So it's looking for more or less a double top rejection and then markets to move down. So there's a certain pattern that I'm normally looking at when market is trying to create a new high. When it fails to do that, it normally gives me an idea that the market is about to reverse.
Opening an account with Paperstone is easy. For those in Kenya, you only need your KRA PIN and ID card. Simple and easy. To register, click the link on the description below.
This is what I call the failed follow-through. I think I talked about it on Monday or in some other few analysis. If you pay keen attention, I've been talking about it. But I'll share with you my idea, okay? So that's what I was watching. And then what happened yesterday, I was really waiting for the markets because I was looking for a USD card long. And I was looking for what USD card short, not long, USD card short and Aussie dollar long. But markets didn't really get to that entry. Then markets quickly moved. If you're watching the markets yesterday, or if you're trading, I'm sure you saw that spike in the markets. So if I can share my screen, and what happened, this week we were waiting for the Jackson Hole symposium. So remember, very important. It's a once in a year. It's an annual event held once a year, okay? And it's very important because the biggest people in finance are going to be meeting and talking about the economy, about the market, what they're expecting, what are their projections, what negative things are they expecting in the next few months, what positive things are they expecting. So it's important to pay attention to what they happen. It's also important to note that then press is not allowed to be in those meetings. So press is not like literally watching what they're saying, but we normally tend to hear from rumors. Fed Powell will be talking, I think on Friday, Fed Powell will be talking. So sort of we can give a short summary of what they were talking about. So this is important to pay attention to it. For those who do not know about it, pay attention as it comes out tomorrow. So if I share my screen, let's look at what I have. So I'll show you my journal first, so that you can see my journal and what I had. So this is my journal. This was I do a recap every day sometimes. I don't think I've shared this week's journal. I have personal reasons why I've not yet, because there's some few things I'm trying. So there are new things I'm trying. So I've not yet done that. But on top of it, like what I was saying, this was on Monday, I believe. So this is dollar. So I was expecting dollar to come to this level, the 109. And I talked about it on the Monday analysis. I was looking for this level to be reached, market to get some. I wanted to pay attention because remember, when you're trading or when you're analyzing, and I keep insisting this, especially to my students, do not try to predict the markets. Try to watch what the market will give you at that very time. And that's something of what I failed to do yesterday, because there's a certain level I was waiting market to reach, but market gave me a different information, which I saw, but I didn't act on it. Okay. So it's very best to follow what the market is giving you and trade depending on that, not what you expect to happen. So early on in the week, I saw this market, we started around this level. So I had two options. I was saying either market can come back down to this support level, okay, and then move further up. So I was looking for this level, then we move further up to the 109, or I was waiting for market to continue rallying from last week's rally, because this was last week's rally, continue that momentum to the 109 level, and then we drop back to now this level, okay, before we get any move. So I'm not really predicting markets to go above or below. Unless it goes above or below, that's what I'll be looking for. But that's what I was expecting. So the highlighted resistance level is the most important key level to me watching this week, as I expect the dollar to correct strongly if this level is not broken, if market gets strongly rejected, okay? So that's what I was waiting for. On other pairs, I was looking, for example, let me show you the trades I was waiting for. So on Tuesday, this was yesterday morning, I was waiting for Aussie dollar to reach the 0.6850 level. At this level, then I get a quick buy to the 0.700 level, okay? And then on USD card, I was waiting for markets to hit the 1.3075 this level, then get a quick short trade to the 1.295. So that said, if you go now to the markets, now look at what happened on those pairs. USD CAD had a strong drop. So this is what I was waiting for. Market didn't reach. So I was waiting for this short from this level to this level. So it's offering a good 1:3 something. Yeah, 1:3.5 risk reward. Very good trade, because I was expecting if market breaks above this level, then it will be a nullified my analysis. If you zoom out, you'll get to see that this is a very strong resistance, and that's what I was waiting for, that level. So you can see, look at that first touch over here. We had a touch here. We had a touch here. Market broke up, strongly came back below. So I was expecting markets at least to come and tap that level. So I was patiently waiting for markets to hit that level before I get my short position to the 1.2950 level, which is also a good support, as you can see over here. There's a certain way I normally draw my supports. It's quite different from the conventional means. So if you look at, I don't have the long, the ones that are going back in history. Many people have those ones. I have my personal reasons why I do this, and I teach it in my class, okay? I call them launchpad key levels. It's a name I came up with, but there's a certain way I look at my key levels, okay? So I was looking for markets to come to that level, such that if market breaks below this level and closes below, then I'll be looking for the 1.2850, another 100 pips to the downside. So I was looking for about 125 pips short to this level and a further 100 pips to this level. However, now that didn't happen. Market instead fell further lower. If you look at the 1 hour chart, what was telling you, there's an information that market gave. So there's this pattern you guys can also be looking at, and I've been paying attention to it a lot. So I never use indicators. I use more or less understanding candlestick patterns, and this was the pattern that formed over here. Very important. So I'll give you guys this head first, so that you can be noting it. If you look at this, I call it a spike and retest. Usually market comes, touches a level, closes below, okay, starts moving below, then comes and retests this level. So if you look at this, if you take a look at this level here, you're seeing here, market comes and rejects it a second time, sort of forming like a shooting star, okay? It's sort of more or less like this, what happened here. You're seeing here, more or less. So market came the first time, then you're seeing this part came again as a shooting star, okay? So it's a pattern I see very often, okay? You're seeing that part, how market rejected it a second time with the shooting star and then further moved to the lower side, coming to touch that level. So the same thing I was looking for here. So when I saw it, unfortunately I didn't act on it because it's really fixed, and this happens a lot in trading, and it's a lesson many people are going to learn moving forward. I was really emphasizing on wanting the market to hit this, but you see, that's what I wanted. That's not what the market was giving me. If I took my short trade here, it could have been a very good trade to this downside. However, my other reason also for not taking it, it was offering a very bad risk reward ratio. I never take any trade with a less than 1:2 risk reward, and that wasn't really offering me, unless I will have really squeezed my stop loss, and it's not a good thing to be squeezing your stop loss so that you just enter a trade, okay? So those are part of the reasons why I didn't take that trade, but however, it was a good short trade. Now, what am I watching now? I want to see how market will react around this level. Market came with strong momentum, okay? So will we have a further break to the downside, or will the market move to the upside back to the 103.75 yet again? Then the question will be, after it moves to that level, will you break above or below? That I do not know. What I'll be knowing is the price action that market will be forming at that level, and I'll trade accordingly. On the other pair, I had Aussie dollar. I was looking for a long at this level. Market also didn't reach, so I was looking for a long up to this level. I was looking for also a 1:3.5 risk reward. Okay. Market didn't get to reach that level. So if I zoom this one, it's almost like the USD CAD. I was looking for a certain level to be hit. So the 0.6850 was my level that I was watching. So if you see, before it was a good support and a further support here, then acted as resistance, then market broke above. So more or less I was waiting for that market to reach that level. We can see market sort of reached the zone, okay? So more or less if you highlight the zone, because market reached the 0.68560 level, but I didn't really get a good trade because market moved up with strong momentum. If you look at the 1 hour, you see here, I was waiting for this level to reach here, but market didn't give me a good candlestick pattern or information for me to enter properly, and then moved further up. So I don't crave a spilt milk. Market already moved. Markets moved very far. So now I'm just waiting to see the price action. Will we go back to the 0.700? Okay. If you go to the daily chart, you'll see that it's a key level. Okay. It's a level I've been anticipating for the longest while. Okay, so you can see how it's acted as resistance. This level that I've marked, the 0,700. So you see how it was resistance, became support, support. Then we came and broke below it. Now more or less I'm expecting to see, once market did this dip for the past 1 week, last week I was expecting to see some correction coming into this level. So with the candlestick that closed yesterday, okay, with such a pattern, this is what we call more or less a morning star. And a morning star is a good indication for markets to move to the higher level. Then I'll be looking for this one to come. This was a very good pattern that formed. Then I'll be expecting markets to move to that level. Okay, so that's what I was watching on Aussie dollar. Right now I'm seated out because there's no pattern. I'm not chasing market unless market drops further down back to this level. Then I'll take that long trade to the $0.700 mark. Okay, so that's what I'm watching on Aussie dollar. No pattern yet right now. Further on, if you look at the dollar index, okay, now let me show you the pattern I was looking at. So dollar index, very good pattern. Let's look at the 1-day chart. 1-day chart, market was moving in an upward trend. Okay, if you look at the marks that I normally put, these arrows are I normally use the Dow theory a lot. So for people who are trend traders, you can do research on Dow theory. Look at it. It's a very good theory that helps you be objective with the direction of the trend that you're trading. So there's a certain way that I've understood it, certain way that I teach my students as well. You can see moving to the downside. I also have the marked Dow, my lower highs. So there we go. So what I was saying, I use the Dow theory a lot. So looking at the Dow theory, that gives me an analysis, or rather an objective view to see when market is moving in a downtrend or in an uptrend. So here market was in a downtrend. I was looking at my Dow theory levels, okay, my lower highs, and then to the upside, I'm looking at my higher lows, okay. And as long as the higher lows are being respected, we continue being in that uptrend, okay. So now if you see up here, what I was expecting market has really been a strong momentum to the upside, okay. So normally I'm looking for patterns that are giving me an idea that market is about to reverse or about to continue the direction. So I was looking at this double top, market sort of reaching that level. If you go to the 4-hour chart, now the pattern that I normally look at, okay, when I'm looking for markets when they're going into a new high or to break the previous high. So pay keen attention to this because you can be using it. I'm giving a lot of gems in this video. If you look at this, you see this previous high. Let's go to the 1 hour, much clearer, so that you can get, because I used the body, the close of the body. So you see this part, I used the close of the body, okay, and extrapolated it to this side. So normally what I'm looking at, so it's what I call a failed follow through. If you go back to the 4-hour now, so doing a top-down analysis. So paying attention, okay. So usually market will come and touch it a first time, okay. So you see this first time that market comes and touch, then it sort of tries to reject and move lower, but doesn't come with momentum. Then what happens after? Market strongly closes above, okay, closes above, but then we have what we call a failed follow through, meaning market doesn't continue moving to the upside. Immediately, the next candlestick that follows is the opposite candlestick that closes to the downside, okay? And then that's what I had here. So you see how market now strongly moved back down. That's what I call a failed follow through, and it's a good indication to look when market is forming a double top or a double bottom. It's more or less like also down here. You can see how down here markets came, had a support, tried to move up, came, had this strong red candlestick, quickly moved back up, then tried to close back below, then moved back up. So that's what we call market is failing to follow through on its downtrend. So over here, market failed to follow through on its uptrend, okay? If you look at a different example, you see here, once market broke this key level, you see how it was a resistance, became resistance here, and then when it came and broke above, now look how we got a successful follow through. Market continued to the upside. So that affirms that the market is moving in that direction of the trend. However, this is a different information. So it's just understanding your candlestick patterns and what the market is telling you, okay? So that's what happened here, and that's what I was expecting the dollar to drop, and that's what I was really anticipating, that USD card drop and Aussie dollar long. However, I just failed to get those entries. So now what I'm expecting on the dollar, we can easily see this market come back here, just touch that level yet again, and then move further down to the 107 dollar mark. So that's what I'm watching on the dollar. I'm not long-term already saying that market has changed direction. I'm just looking for a bit of a correction to this level, because we all know that markets don't move in a straight line. They have to move up, down, but in a certain trajectory towards the upside, okay? So that's what I'm expecting on that one. And then now looking at gold, Gold also is waiting for the $125 mark to be hit. So the $125 mark to be hit and then move further up, okay? Then move further up. That's what was waiting for this one, okay? So, but that didn't happen. Market got that support. We moved further up from this level, the 130, 1730, I mean, $1730 mark is where market reached. So I was expecting market to come to the 125, still looking for it because I use key levels when I'm trading the when I'm trading gold. Okay, so that's what I'm waiting for on this one. Let's see if market can still get the further movement to the downside and then we move further up. Okay, so that's what I'll be watching on gold. Nothing much. Then US 30 markets has really been falling very, very strongly. Looking at the 4-hour chart, I'm also anticipating. I'm very long on the Dow. Actually, if you look at my Dow theory levels, okay, now this one was broken. So like I keep saying, now I teach this extensively in the classes, but I'm looking at the Dow. You see how market was in this downtrend? This was my lower high, lower high, lower high, lower high. Now, once we breached this lower high level, okay, markets broke above and came back below. As a rule of thumb, markets always break the Dow theory and then comes back below, gets a support somewhere and then moves further up. So the level I'm watching is the $32,500 mark. Okay, you can see strong support previously. So that's a level I'm really watching, anticipating to see how market will respect it with anticipation now to start moving to the upside. So that's what I'm watching. Market hasn't reached that level yet. Okay, so I'll be watching to see. We've not had any correction since market broke below the Dow theory level. So I'll be looking to see if we can get a good buy at this level at the $32,000 mark, back to the upside. Okay, so that's basically what I'm watching. So if you've understood well, I'm really looking for longs on most of my pairs, which means I'm looking for shorts on the dollar. I'm very in the short term, I'm very short term on the dollar, looking for market to go here. And if that happens, then most of my pairs are going to move to the upside and USD CAD continue moving to the downside. Unfortunately, we didn't get that trade we were looking for. But if market can be able to rally back to this level, then I'll get a good shot for now. So that's what I'm watching. Just look at the other pairs. Euro USD is still below. It's still at parity level. By parity, we mean it's the same price as the Euro USD. As the euro, I mean. So the dollar and the euro are the same price, roughly around the 1:1 dollar mark. Okay. The last time we were at this level, I think, was about 20 years ago. Let's put the 1 chart so that you can see it. It was been quite some time. So here, yeah, around 202 is when the dollar was at parity back then. Okay, and now we've the dollar has really been rising and we're back to that level. So it's very important to watch such. It doesn't happen a lot, like you're seeing. The last time it happened was 20 years ago. So it's important looking at the daily chart. Market has really been respecting the downward trend line, respecting my Dow theory levels as well. Okay. This. Sorry, no worries. So what I'm looking for, I'm still looking to see if the dollar can continue respecting this channel. Look how we've respected the trend line. Okay, really respected. First touch, second touch, third touch, fourth touch, and markets continue. I'm not a big trader on trading the fourth trend line bounce, but that doesn't mean market won't really respect it. This was respected and markets move further down. So that's what I'm watching, and see if market can reject this level, especially if it comes down to the lower level of the channel formation that we're watching here. Okay, however, we can also get a double bottom formation at this level. Okay, markets can fail to break below that level and move back up to the upside. So that's what I'm watching mainly. GBP USD, same thing. Market has also been in a downtrend, respecting the Dow theory levels. And remember, I stay short until the Dow theory level is broken to the upside. That's why I have this green line. And for my green line, that's what was broken on the Dow, this one. And that's why I'm saying I'm very long in the long term on that one. So yeah, so that's basically what I have. I see AJ asking, last time it happened was last month, I think. I'm sorry, AJ, I'm not sure what you're talking about last month. Do you mean the dollar parity, or what do you mean? Because if we're talking about the dollar parity, yes, could have touched a bit on, what is the Euro USD? on last month, but you see last month we got a quick rejection, okay? By when we're talking about the dollar parity being below the parity, because we reached it, but market didn't really last. It just touched it and moved further up. Now we want to see a strong move for it to stay for quite some time, like what we saw back then. You think back then, because it was official, once it broke below, you see we stayed below this level. The whole time it was below this level, it was below the parity. Stayed since we went below it in 2000, January 24th, 2000, and came back above it in 2002. So that was about 2 years. Yeah. So by last month, it happening by parity, it was just a touch, okay? Just a touch, and then market moved higher. So now we want to see, can the market maintain below that level, okay? So, but it's true, it actually happened last month, but for a very, very short amount of time. And then markets moved higher. So the question is, will that happen again this time, or markets will move further up or further down? So that's what we'll be watching mainly. So that's mainly it. I don't think I have much apart from that. Paying attention, be listening to the Jackson Hole tomorrow. I see Musaj asking, can you do USD JPY? I could, but I'll do a lot of guesswork. I don't analyze that pair. Let's look at it together. Maybe you can understand my way of analyzing the markets. Because if I come here, okay, my way of looking at the markets, I'm seeing this is the daily chart. So let's put it full screen. So this is USD-JPY. The last time I looked at this pair was very long. So what I teach my students, if you want to understand how I normally look, I have a step-by-step process. And the number one thing I'm normally looking at is the direction of the trend. So where's the direction of the trend moving to? For this one, I'm looking at it's to the upside. And how do you know the direction of the trend is moving to the upside or to the downside? It's basically by looking at the formation of higher highs and higher lows, okay? So the rule of thumb, I'll just come take and mark my higher lows levels, okay? Let's start maybe here. So this is where now I use the Dow theory. So you can take, I normally like looking for the bottom. Okay, so if I look here, this was in a downtrend, okay? But then now we came and got a good bottom at this level, okay? Around here and around here, okay? And then I want to start marking my levels, respecting the higher highs and higher lows, okay? So market sort of moved up to that level, created a higher low here, okay? So I take that higher low, okay? Then market moved, created a new high here, okay? Created another higher low here. So as long as we're respecting the higher lows level, until market breaks it is when we'll change the direction of the trend. Then market pushed to a new high up to this level, okay? We got a higher low here, okay? And then market moved to a new high, which is here, slightly higher, got a higher low here, okay? Now notice that this is not a new high, so I won't mark this as my higher low. I want to look for where market, since this was the new high, this was my higher low. My new high, higher low. This didn't create a new high, so this won't mark as my higher low. My next higher low will come around this level somewhere here, okay? And then my next one will come somewhere here, okay? And then my last one take this, then I come and mark this one here, okay? And then now this will act as my Dow theory level. So I'll be looking, as long as market is respecting this higher highs and higher lows, I'll be very long. Now notice, okay, so Musech, if market comes and breaks below this level, okay, then that is a very, very good indication that market might be changing direction, okay? Not a certainty, it's not 100% certainty, but it's a good indication that market might be changing direction, and that's what I'll be watching, okay? So watch for those levels. Now, once I've established my direction of the trend, now I already know it's to the upside, okay? Though this one is a late one. Once you normally see market has really, really moved extensively, just know one way or another, it might be coming to an end. But remember, the trend is your friend until the trend changes, okay? So now what I'll be watching, okay? Once I establish the direction of the trend, which we've done, I normally go down to the 4-hour chart, okay? Now start looking for patterns here. Let me put this much clearer there. I start looking for patterns that can give me because I want to be trading in the direction of the trend. So what patterns will I be looking at to give me that certainty? Okay, so I'll be looking at key levels. Okay, like this was a good level to buy previously. I know we're doing it late because it's already moved, but looking at the previous support, if you draw this level, okay, you're seeing how market. Now this is also what you call, same thing I was talking about, the failed follow throughs. You remember about it? I just talked about it. How market came, broke below this level, quickly moved back up. So moved higher, then come and retested. So that's what I'm looking like on the dollar, how it's broken back below. I'm looking for that retest of that level. So this was a very, very good buy level. Now, the next thing is now you need to ask yourself, how will market come and reject the previous high? Okay. I normally have different colors for my support. I use my red as support and blue as my resistance. Okay. So now the question is, how will market come approaching this level? Okay. Can it come approaching, like if you look at this previously before it came slowing down in momentum. So it's moving up, down, up, down, up, down, up, down. So if it comes doing the same, like now I'm saying it's coming, moving down. If it comes, creates a small high, moves down. I think I'll do a recap on this on Friday as well, just to see what happened. It can be a good test to use. Normally, I also have what I call a tree push. I normally look at. It's a good indication that helps me look at double tops or double bottoms. So if market can come respecting this level to this upside, then I'll be looking to see if you can get a double top correction, if you get a rejection, and markets to move further lower. However, if it strongly breaks above and continues the follow through, then this will be a very good long trade to continue. But for now, I can't really ascertain. I don't have any pattern looking at it. Okay, even here currently, no pattern. And my main emphasis in terms of patterns, I always emphasize on the 4 hour. It's what we call the TTF, the trading time frame. So I have my HTF, my higher time frame is the daily chart, my TTF is my 4 hour, then my lower time frame, which I use to look for nitty-gritty entries, is the 1 hour chart. So every trader should establish their HTF, TTF, and their LTF on their trading time frames, on their systems, their trading strategies, I mean, okay? So I hope I've done good enough justice on that, Musesh, but that's what I have, okay? So AJ is also asking how can I get those Excel file for recording my trades? Do you mind sharing, please? What do you mean exactly, AJ? Excel files recording? What do you mean recording your trades? Because what I normally use in terms of my journal, I use Notion. I don't know if you're familiar with Notion, so that's why I do my trading journal. I don't have an Excel file or sheet. I just do it on Notion. I just input everything on Notion. Okay, so cool. So allow me to end it there. I'll upload this video on YouTube hopefully before the end of the day, and then let's see what happens in the market. But markets are moving. We keep asking ourselves this in the office. The markets are moving. Are you? Okay, because and that's not a mandatory. It's not just because the markets are moving you need to be moving. The markets might be moving but you don't have any setup. Like I don't have any setup right now, but the markets are moving, so no pressure on it. Just follow your analysis at the end of the day. So allow me to end it there. I see my time is running out. So AJ, you're asking, how does Notion work? Is it a site? Yes, it's a site. It's notion.com. Just search Notion, notion.so, I believe, or just let me see. Yeah, notion.so. It's a site that we use for work. It does a lot. You can watch tutorials on YouTube and understand how it works. On our classes, we also teach our students how to use the Notion and how to journal their trades, how to use it to journal and gain data out of it. Okay, but anyway, allow me to end it there. We'll do a catch up on Friday, and I hope you guys have a wonderful week. Once the Jackson Hole Symposium starts tomorrow, so it's tomorrow, Friday, and Saturday. So pay attention to that. So apart from that, see you guys. Have a wonderful week, and I'll see you on Friday. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.